U.S. stocks tumbled Friday after the Personal Consumption Expenditures, or PCE, came in hot. The PCE is the Federal Reserve's most closely watched inflation measure and is another sign that price pressures have become sticky. U.S. Treasury yields rambled higher following the reading. The two-year note surged 12 basis points to 4.81%, while the 10-year note gained 7 basis points to top 3.95%. And the difference in rates continues to show the inversion, which is a strong sign that a recession may be on the horizon. The PCE number supports recent indications that inflation is not falling at the pace and extent investors have been hoping for. For most of us, it's kind of like a bill collector that keeps calling or showing up on your front doorstep. For me, it's kind of like a process server who's chasing me down to serve me with court papers. My answer is to just hide in my office and make YouTube videos, but I digress. Back to the markets. Investors are just going to have to readjust expectations around the path forward for interest rates and the market. But I have warned you about volatility, and that's what we're going to get because the Fed's credibility is on the line, and the Fed is likely to risk overshooting rather than quitting the inflation fight too early. So perhaps get used to that process server hanging around a little longer. And let's go back to the two-year weekly chart on the volatility index. And as you can see, the symbol is $VIX in the upper left. And as you can see in the upper right, this is on stockcharts.com. Again, that nice dish, we came on up here. But at this point, the VIX broke down and below this bottom trend line. But that break down and below just gave us a little bit of a move higher in the stock market. But it looks like we have some bottoming and basing in the VIX with the move in the VIX now heading higher, which means that the stock market may have some trouble coming here. Now, in the upper portion of the chart, you can see the RSI. The RSI has this nice little bottoming and basing here, moving on up. It's right at the 50 or midline, or just below, but heading on up, so it's gaining some steam. And down here in the lower portion, you can see the MACD with the fast line in black, just about to break through up through the slow line there in red. That also shows that the VIX is strengthening, which means the stock market is weakening. So let's now take a look at the charts. And we're now looking at a two-year weekly chart on the spiders, the SPY, and the close on Friday, 396.38. Let's draw this channel. We have the bottom channel line moving through like that, a top channel line moving through more or less like that. So we've been moving our way down in a cycle, hitting the top channel line, coming down, hitting the bottom channel line, back up, back down, back up. Now we did reverse at this point, and we moved up and through the 20 EMA and the 50 EMA, as well as the top channel line. Now once we did that, we had a new game, and that game was this new channel line with the bottom channel coming through like that and the top channel coming through like that. We didn't quite get to that top channel line before we decided to roll over. We came on down. We're down back through the 50 and right sitting near the 20 EMA and the top channel line at this point in here. So, looks like we may continue our way down. Let's go ahead and take a look at the oscillators, and we're going to come back to the price chart. The volume looks like it is slightly declining. It's not significant, but it doesn't help. Into the MAC, you can see that the fast line looks like it may roll over. Is it going to come down and do another reflection on off, or is it going to come and go through the slow line? Well, we'll have to wait and see. I think we may head down and through the channel, and I think that's what the probability is. Here in the histogram, you can see from this top moving through here, it's degrading, declining from this point here down through here. My line's not straight, but you get the idea. Into the price rate of change, this also a major rollover. Looks like the sawtoothing is coming on down, and this looks like it's coming down through that zero line and wants to continue further down. Same thing here with the RSI. It's a moderate 48.65. We've been running through a channel on its own, more or less like that, but it looks like the sawtoothing wants to bring the RSI down below that 50 line and perhaps even further down. So weakness is being shown by the RSI. Here in stochastics, pretty much the same thing. This rollover here, fast line moving on down through. How far is it going to go? We don't know. But I think the odds are we'll at least come and test that 50 line, maybe move through that. The Williams is already testing the 50 or negative 50 line. Looks like it wants to continue on down. Watch that Williams. I think it's going to head on down here further. That will also bring the price chart down. But let's look at something else that hopefully is not too convoluted by all the drawing. But in this move from this point here through this channel line, you'll notice that we came on down, we came back up here, we headed down further, and we came up to that point there, a W with this midline here. We broke above that midline, but once we broke above that midline, hit that top channel line, we came back on down here. And then again, up to a midpoint, back on down, and then up to complete the W. Once again, near that top channel line, we did exceed that middle, but we broke back down again. So here we go, all the way back down here. We came back up to that midpoint, back down here, and then up. So once again, we exceeded that middle portion there. So the question is, twice before, the move down after the completion of the W has been further. We are completing the W here and we're moving on down. Does it mean that we're going to head even further down? Possibly. Watch out for that. That could be a danger. And for today, that's ChewDog Charts. Thank you.